Procter & Gamble is closing out its fiscal year in style. Fourth quarter profits and revenue came in higher than expected. P&G has also raised guidance for fiscal year 2020. The stock is up. The stock over the past year is up more than 40%.
And fuego.
That is not what we typically expect from consumer products giants like P&G.
Yeah, this quarter and year really was all about broad strength. So all categories and all regions were up. The organic sales growth in Q4 of 7% was the best organic sales growth since 2007. So really strong, good all-around performance by Procter & Gamble. And this is another company that, we were joking about the 3-year transformation at Under Armour. This is a similar company. A company that's going through a similar thing in 2016, 2017, announced huge restructurings. And really, they had started to get disrupted from all sides by startup brands. And decided that they needed to focus their efforts on doing less. So they were going to really back their chosen strong brands and strong categories. And you're really starting to see now the power of when a company focuses its resources on key areas, you can actually have a really strong impact. And so, Procter & Gamble, really just a great quarter. That 7% growth was split in a healthy way between volume, price, and mix. So really firing on all cylinders.
It's funny because I think back to when we started doing this podcast in January of 2011. Procter & Gamble was a consumer products giant then. It is now. And yet the business when we started back then was pretty different. And I think about the changes that P&G has undergone. And really what you just talked about for the last 3 years, it started in smaller ways a couple of years prior to that, because it really is for all of its success and all of its size. There used to be a lot more products. There was a whole food division that they just decided we got to get out of this business. And as you said, they've really focused on what they do best, which is stuff in the home, home care, cleaning products, home care products. I did want to ask you though about, you talk about how P&G is under siege from different upstarts. One part of their business that the upstarts appear to maybe haven't won outright, but they appear to be winning in a pretty big way is shaving.
Yeah.
Did they write down all of Gillette? Like to the tune of $8 billion? I thought I saw that this morning.
No, I don't think that's right. Grooming was actually up 4% for them. Okay. They have definitely been under fire from these startups like Harry's and Dollar Shave Club and that sort of thing. They have responded in kind, and so you can now sign up for Gillette subscription service. They certainly got caught a little flat-footed with a failure to innovate, but you can copy a business model, and they have done that. And what Procter & Gamble is incredible at is product development and knowing their customers. That has not changed. And so they have sort of stopped that bleeding. And as you see that, there's growth now back in grooming that has not been there for a while. They had relied too long on simply raising prices and adding another blade.
Right.
And so they're back to a more steady cadence of innovation with much more reasonable pricing, and that hurt them for a while. But we're sort of on the other side of that now, and they are competing more effectively. It's funny you mentioned their business has changed a lot. They have 60% fewer brands. They really narrowed their focus to be able to back winners and market smartly. And you own this company, I think, for very simple reasons. It should be pretty stable. It's a blue chip cash cow, and you saw cash flow performance really strong. This was their fourth quarter, so I'll say this year, and they guided for really strong cash flow performance next year. And they've resumed growing their dividend. It was in 2017 they only raised their dividend 1%. 2018, this is their fiscal 2018, 3%, and this fiscal 2019 was 4%. So things seem to be back in order at P&G.
Well, and we've talked before about a company like Pepsi, when they are negotiating with grocery chains across the country, around the world, and they have not just all of these beverages, but they have all of the Frito-Lay products. So they're operating from a position of strength in terms of where their placement is on the shelf. Well, just think about Procter Gamble. How many, when they're going to negotiate with grocery stores, how much shelf space they are commanding. It's really pretty incredible.